But quickly go across to Yatin and highlight for us what's been Cipla up to in the last 1 year or so, and what really, Yatin, is D Street believing is the vision ahead for Cipla.
Well, Aisha, if you look at Cipla, the stock has been sideways for last 2-3 quarters. But if you look at the brokerages, most of them have a buy rating. In fact, almost 22 of the analysts which cover, most of them have a buy rating. 19 of the analysts have a hold rating on Cipla, clearly indicating that buy and hold is something wherein the range of the recommendations is. Only 6 analysts have a sell rating on Cipla currently. If you look at the brokerages, we have a whole host of brokerages which have target price in excess of 650 rupees per share. So we have HDFC Securities, UBS, Credit Suisse, all of these having target prices in the range of 675 to 710 on Cipla. On the weaker side, we have brokerages like Morgan Stanley, Goldman Sachs and Ambit, who have target prices in the range of 450 to 500. They have been slightly underweight on the stock. But if you look at the key triggers for Cipla moving forward is the kind of acquisitions that they have done. A strong inorganic pipeline. They have seen some business ramp up due to acquisitions like Evagen and Exelon. Of course, the UK launch of the composite inhaler, which is Adaware, is something which will be a big short-term trigger for the stock. Also, if you look at front-end incentives, that would probably aid the growth for Cipla, and the domestic market has been really doing well for a company like Cipla. If you look at the overhangs, clearly the Indore plant is something wherein the FDA concerns are there. That is probably a hangover on the stock. But if you look at the Adaware approval from the UK market, that is getting delayed. The market was excited about the product, but probably will have the management to answer questions on all of these issues in some short time.
Right, so let's connect with the management. Yatin, lovely analysis. Umang Vohra, Managing Director and Global CEO, joins us. Umang, good morning, and on behalf of everyone from ETNOW, thank you for joining us. We're delighted to have you on the show. Let's first start with the general mood point, and the mood point is that Cipla numbers of late have disappointed the street, but Cipla is now trying to restructure, innovate and focus on big structural opportunities. So what are some of the focus areas you are now working on? My last interaction with the management was that we are trying to enter into US. What's the update there as well?
Yeah, so I think you've laid out some 3 very key words. You said focus, you said opportunities in some of the few select markets, and you said innovation. And that's pretty much all 3 are buzzwords for us today in our strategic footprint for the future. So let's start with focus. Cipla's focus areas are going to be the largest markets in the world, and they are largest by 2 designs. They're going to be largest because we believe there's tremendous opportunity in the marketplace for these markets. And the second thing is we have very, very strong legacy positions in some of these markets. So let's talk through some of them. The US will be a focus area for us. We are under leveraged in the US. So if we were to look at just our share of makeup vis-a-vis our peers, less than 20% of our revenue comes from the US. For some of the others, it's almost 40%. It's our biggest runway for growth. We are excited about the pipeline we have. We are very excited that our acquisition and integration of Invagen is proceeding like we had hoped it would. And we are hoping to see some new launches coming into the US, and we have guided earlier that this could be Q4, starting Q4 of this year, well into Q1, and our filing trajectory is looking really nice as well. So not only are we filing for the future, we're also hoping to launch a large number of products, and some of these are exciting products that we're going to bring to the market. So I think the US is our biggest runway for growth. Coming back to legacy markets, India, South Africa, very strong leadership positions. Leadership is very important to Cipla, and we will continue to grow these markets ahead of market growth. We've demonstrated across several quarters that we can grow faster in South Africa. We're about growing as fast in India as the market, and over the next couple of quarters we are going to be growing significantly faster than market in both of these home markets of ours. And then we have legacy positions in several emerging markets of the world, and Cipla intends to continue to focus on these markets. And we're also trying to make sure that we're not as wide as we used to be. In our quest to serve patients really well, we've also taken a decision that we're not going to be spreading ourselves too thin. We will narrow down our focus. We've actually transitioned some of the markets from being direct to B2B, right, which is where we just approach the market through a partner. And we've also frankly made sure that our slate is not as wide as it used to be. We've already narrowed down, And I think most of that has already been baked into our numbers. So we're optimistic about our growth markets. We're optimistic about the slate that we have, and that's just the focus we're trying to bring in. I want to go back to innovation because you mentioned that, and I think it's a very nicely, aptly chosen word for where Cipla is today. As a company, we believe we have very deep capabilities, both in R&D as well as in the ability to manufacture these products. And Cipla's legacy in the past has just been being able to bring and develop products and manufacture them for our partners. And we're trying to tweak that equation a little bit. We're trying to move away from just doing it solely for our partners to actually doing it for ourselves now in some of the markets that we choose to operate in. And that's the transition we're in. I think we are going to focus a huge amount on innovation. We've taken R&D up from levels of 3% to close to 8% now, and chances are over the next 2 to 3 years that may go up. But we're going to fund this R&D through our own ability and our own internal accruals, while making sure that our profit line and our EBITDA numbers begin to rise in the medium term. So that's just what we're excited about. We're deeply excited about these markets and our own ability to execute, both in the labs as well as in the manufacturing floor.
If I look at your presence in US market, it's less, and you rightly pointed out. If I do a like-to-like comparison with your peer companies like a Lupin or a Sun Pharma, now Cipla needs no introduction to the pharma opportunity. I mean, you are one of the oldest pharma company in India. So at a time when such a large generic market opened up, how come you were not able to monetize on that?
Yeah. So let me answer that question in a different way, right? Let me answer the question to say that Cipla's focus at that point in time was elsewhere, and it was in saving the billions of lives in Africa that reeled with HIV and AIDS, right? So I don't know whether we'd ever be able to toss up. Now financially, the US is always a more attractive market, and I completely side with you in that logic, because I've also been and worked in the US. But at the same time, I think Cipla's legacy was always to be for the patients, and it did so, and it brought $1 a day treatment for the several billion of people who were living with HIV in Africa. And there's no real way that we can measure either of these sides, right? Now that we've accomplished and done a lot for the HIV patients in Africa, I think the company strategically decided that the US is going to be a big market that we're going to focus on. And you're right, Cipla is the oldest company in India, and Cipla has very deep capabilities, and we don't think that for us to be able to scale in US will be a challenge. I have to say it's not a slam dunk, but Cipla is committed to making the US a relatively large market for us, like it is for the others.
Umang, hi, morning. I'm going to talk about the market opinion, and markets really don't like pending regulatory overhangs. There are some on in your company with respect to the US FDA on Indore as well as Invagen plants as well. What's the exact update there?
So just to clarify, Invagen has no pending FDA issue. The Invagen issue is resolved. The plant is got its EIR, and we are manufacturing like we would on any normal day. So we don't have any more overhangs on Invagen. Invagen is through. The Indore site, we're still hopeful that we should be getting to hear from the FDA shortly. And we remain very positive about the fact that we've done as much as we could for the site to remediate. We believe our response, is something that the FDA would be happy to read. And we're awaiting approval, or we're awaiting next steps and communication from the FDA. We deeply respect the fact that the FDA takes its time for the citations that it mentioned in its Form 483 for Indore. And but at the same time, as a management team, we are hopeful about the fact that that Indore is a plant that we will be able to manufacture like we are doing today, and continue to launch our new products from.
Realistically speaking, how soon can we see a clearance really coming in when it comes to the Indore plant?
Well, we were hopeful of getting something. We had guided earlier that we were hopeful of getting something in this year. So I think we stand by that. This calendar year, we're hopeful of getting something back from Indore, back from the FDA on Indore. And whatever the agency decides, we're committed to making sure that our products and facilities meet the standard that is desired by the regulators. So we're hopeful as a team that we get positive news by the end of this year. At the same time, I'd like to tell you that nothing goes undeterred, even if the site is still being reviewed by the regulators. We're still preparing for launches from that side. And this is one of the many sites that is US FDA approved for Cipla. So we're taking all the observations the regulators mentioned very seriously. And, again, looking forward to some good news at the end of this year.
Umang, what some of the doubtful analysts on the street are waiting for are indicators, and two things stood out when I looked at or scanned the reports. One of them was any kind of indication from the management as to when would base margins convincingly stay above 17%. Two, a very interesting risk that a bear has on your company is that the earlier than expected inhaler launch in the US could be a risk to the bear case scenario. Now, what would your thought be when it comes to timelines for both of these?
So let me take both. I think both are important in their own way, and some of the analysts have got this right. I'm not going to duck the question on EBITDA. I think our EBITDA lags our peers, and for sure. And I think there's enough of management focus. We've guided this year to be between 16 to 18% of EBITDA, despite having R&D at 8%. And we're staying good to that promise. The first quarter was at 17. Frankly, the way we're seeing our year, I think we feel confident about being able to meet the 16 to 18% guidance that we've given out earlier in the year. Having said that, 16 to 18 is not where Cipla wants to be. It definitely wants to be slightly higher than that. And we're putting in the efforts to get the EBITDA trajectory back. So all the R&D, everything else that I've spoken about earlier is something that we have to find a way to fund. And Cipla will do that. The management team is committed to it. The risk to the bear case is the opportunity to the bull case, right? So let me answer with the opportunity. I think the opportunity is that yes, if Cipla can get an approval for its inhaler products in the UK, and I guess you mentioned the UK, but I'll talk about the US as well, because the inhalers is an opportunity that Cipla will pursue in the US as well. So we are hopeful that this approval too would be something that we should hear back from the UK regulators pretty soon. We are a little disappointed that we haven't been able to monetize this opportunity as yet. But in having said that, I think there are just two companies which are global companies which have been able to monetize this opportunity before us, which are 5 times or 6 times our size. Cipla's endeavor is to be first in such opportunities. This is a learning for us, but even if we are the third person to market this product, there is value for it. And frankly, the way we are looking at how the regulators are looking at this product, we believe that there is opportunity for us to be in the market at least by the end of this fiscal year. So we're still hopeful. I think it will be a big trigger for the stock. And I think this is Cipla's deep core capability. We supply 70% of the Indian market with inhalers, and for us it's important that we use this capability to be able to launch in the UK and to be able to launch in the US when that opportunity arises.
And then the other thing is, since this is turning out, or this could turn out to be a big trigger for you, inhalers, to your mind, how big could the size be? I mean, one thing is the market size that exists and people then guess as to what is it that Cipla can do. But internally, if you could share, what are the targets that you personally have from the time you launched this? And I actually did ask you about the US as well. It was not just restricted to the UK. But what are your thoughts there?
So I think in the US, each of the inhaler products could be $50 to $100 million in size as base case revenue. Now, if you're first in the market, the 50 to 100 is blown out of the park. You could be selling somewhere close to $200 million or so. But 50 to 100 is a safe bet for each inhaler product that we bring to the US. And all I can say is that Cipla will go for them. Cipla will be a player that will develop its own, and where our risk becomes too high in terms of what we can fund, have a right partner to develop this with. So we will be going after most of the inhaler products that are there in the US, and we've been pretty public about the fact, at least in the last earnings call, that Advair is going to be one of those products as well.
Umang, you've just shared your R&D spent number with us, and that's a new DNA, or that's a change of DNA from Cipla, because this percentage of your sales, if the R&D now goes to 8%, that means a lot of reboot has happened at Cipla. So in terms of opportunity, what are the opportunities would you be chasing? Are you looking at developing new molecules? Would you be chasing the good old generic model, or are you now seriously trying to file for Para 4?
So let me say we will choose, large chunk of the spending will go towards generic. Let me caveat that with a few things. Cipla's historic spending has been low for two reasons. One, because Cipla chose to partner in the US, and which is now changed. That stance is changing slightly. We're trying to sell more and more of our own products, and when that happens, your R&D has to go up. So that's the path that we are on right now. We believe we have the right capabilities to do it, and we are currently executing to be able to get there. We are going to be after opportunities which are not necessarily only Para 4, but opportunities where, because of our capabilities, we can be in the market sooner, and we can be in the market with products that can help, with products where products offer the ability to be longer in terms of just the tail of the product life cycle. Which effectively means that not many people would be able to make those products. So I think that's what we're going to be after. In terms of categories, let me just mention the patents in the US are going to be off largely in the next 5 to 7 years around 3 broad categories. They're going to be around respiratory, which Cipla is very deep in capabilities with. They're going to be around HIV, for which we believe the story is written and Cipla has done relatively well in terms of partnerships or its own ability to launch those products. And they're going to be areas around immunomedications and areas around oncology. Again, two areas which Cipla is well versed with. So it will be fair to say we'd be over-indexed in some of these areas. It would be fair to say that we'll find a balance in our portfolio between Para 4 opportunities as well as opportunities where we think there is no legal outcome that's required in the marketplace, but one where the sustainability of the product revenue stream will be guaranteed. So we'll be after all of those opportunities. We've signaled we'll be filing this year something like 25 products, and hopefully that trajectory will continue for the US.
What about
on the emerging side of the world?
Okay, what about your what about your bread and butter market, the domestic market? I mean, you always, we always tend to think pharma means US generics, but Indian pharma companies also have a very strong domestic presence, and Cipla is has a strong formidable presence there. What growth do you see there, and what are the margins in the domestic business?
Yeah, so I was actually coming to that. So I spoke about US, and I said just before you'd come in, I was going to say, okay, on the emerging side of the world, let's start with India. India will continue to be the largest market for Cipla, and for a while, because we're close to $1 billion there, and we hope to cross the $1 billion mark in India relatively soon. We are going to introduce products there where out of our own labs, you can see it in indications. We've had a very prolific launch calendar, whether it's in the area of dermatology, whether it's in the area of cardiovascular, whether it's in the area of urology. And a lot of these places, Cipla has positions in the top 5. Urology, we're number 1. Dermatology, we're fast catching up. Cardiovascular, CV, we're number 5. And actually, latest data shows us to be number 3. So we are going to be launching in each of these categories products that are either life cycle extensions or products where partners believe Cipla is the best partner to take these products to market. And there are several such products where partners have approached us to launch in the market. And these are MNC partners. These are partners which could be other Indian companies, right? We've done a great job with the Hepsivir portfolio. And so therefore, India's prolific introductions will mean that India will continue to launch, our India business will continue to launch between 3 to 4% of sales as new products year on year. Right, and that growth is going to come. Our deep volume growth in India is going to be strong. We continue to see volume growth of upwards of 8 to 10%. And pricing, whenever there's an opportunity allowed by the regime in India, I think we are going to be taking that. So India will grow higher than market. We're clearly looking at our India growth to be in the 13 to 15% range over a larger time period. Now, we don't disclose segment margins, and I'm going to refrain from doing that on the channel now, because that's not, we don't think it's appropriate to disclose that. But I would like to say that India is a very profitable market for Cipla and is a very important market for us, and will continue to be that way.
Umang, the big picture looks great, but more a myopic view. You'd earlier guided for EBITDA margins in the range of about 16 to 18% for FY17. Are you sticking by with that, and is there more a likelihood that you're going to touch that 18% level rather than 16?
No, so we're going to be in the range. I think management's vested with trying to get to 18, right? But we've guided to 16 to 18, and frankly, I think with 8% of R&D and with the US not at fully at scale as yet, and hopefully next year will be a very different, different conversation if our launches come right. But for this year, we're guiding to 16 to 18, and we'll try and be close to 18. But frankly, I think the range of 16 to 18 is good enough for us.
And I'm sure next year, Umang, when we talk, it will be a good, different conversation from what it is right now. Not that this is not good, but I'm sure it'll be much better than that. My final question, at least from my end, Umang, is while margins is one story, and I'm sure people will quiz you on analyst calls about the return ratios and how they will move up as well. But Days, for the sake of our viewers right now, what is your internal assessment of what's the kind of top line / bottom line ballpark growth number that you could probably guide to right now, either over the next couple of years or a CAGR view over the next 5 years, if you have that kind of a view?
So we have that view. I'd just like to say that our CAGR organic growth will be as good as or better than competition, right? And inorganic opportunities will come in as and when they do. But I would like to guide to say that we will be better than competition on our organic growth. Cipla has deep capabilities in being able to do that. And where others are grappling with the issue of the US reaching a certain size and the challenge of growing it, Cipla is still, I would say a novice in the US market. It's still at levels of sub $400 million. So we have a large runway to catch up to be $1 billion. And that's frankly the opportunity of growth that we have there. Our domestic market foundation is strong. We will continue to beat market in India, in South Africa, and several of the other emerging markets that we operate in. So we will be ahead of competition organically, and we'll look for the right inorganic opportunities as they come along.
Okay, closing comments really. How do you define competition? I mean, within pharma, when you use the word competition, it's very difficult to single out that this company is my competition, that company is not my competition.
So I think let's look at the Indian context, right? I think whether it's Sun, Lupin, Reddy's, I think we'd like to see them as our competition at this point in time. That's a pure set really, right? And so we're going to bench ourselves with them. We have a long way to go. These companies are also very good companies, and they've got great return ratios, and at the same time they're also growing well. So we'd like to bench ourselves and run the track with them, right? And that's what we're trying to do. But I think the core of Cipla is also about the passion we bring in our work. It's about the meaning that we have to patient lives, and that's going to be at the core as we keep competing with some of our peer set here.
Umang, thank you for your time. You've given a lot of valuable time for this interaction. Thank you for joining us, and certainly hope to see much more of you going forward.
Thank you guys. Thanks a lot. Thank you. Bye-bye.
Well, a very candid chat with the CEO of Cipla. I mean, he's really outlined everything piece by piece. US generic market is where they want to focus on. They are looking at investing in their R&D capabilities. Cipla has never focused extensively on the R&D capabilities because they up until now have been focusing on the legacy market, which is the Indian market or the semi-regulated market where the R&D spend has not been there. They are of the view that they need to have a sizable or increase their presence or business presence in the US generic market, which is the biggest market, and in order to do that they are looking at selling some of their own products while selling it to the channel partners. So this company is at a stage of reboot. They're spending more, they're reaching more markets, there is a new management team at the top which sounds committed. So this could be one of those dark horses in making markets. Typically in terms of priority, the priority is still Lupin, Sun Pharma, Reddy, and then Cipla. If they're able to get the act right, we could be having a completely different flavor to the conversation next year with Umang. But in terms of the moot point, the headline from Cipla is that right now they are focusing on generic market, and they expect that the US generic growth will be higher than the industry average.
And even the short-term view is pretty positive, you'd have to say, given all the compulsions right now with regards to the Indore plant. They are hopeful that they're going to get the US FDA-led regulatory nod coming in this calendar year itself. And they've maintained that EBITDA margin guidance of 16 to 18%, only hoping that it is going to be at the upper end of the range. So yeah, things look good for Cipla, and of course the big picture vision, really the time frame of 1 to 2 years looks exceptionally better as compared to the short term view for Cipla. What's the stock up to? It's holding up by about 0.5%. The market in the meantime, we started off okay around that 8750 mark, but we've completely fizzled down from there. Even the broader markets have completely cooled off. Now we are floating just about flattish, on the brink of perhaps breaking into the red. Who knows? IRB, Aurobindo Pharma, Ajanta Pharma, ZTCSI are big winners. On the flip side, it's Syntex.